Hello, everyone, and hello, Shakti. Have you noticed something?
Gold.
Uh,
I see gold
gold.
everywhere.
I see gold everywhere too. So, hello, everyone, again. And as you may guess, the topic of today is commodities, in particular, gold.
Gold.
Something crazy is going on the market. There is a golden rush. Don't
Gold
you think
rush.
so? Yeah, gold rush. Well, I don't buy commodity. I prefer actual stuff, just like earrings, golden chains, and all those things. But some people just buy certificates with gold, and
I have some,
what
little bit.
good, very good. It's probably safer because I tend to lose things. So
The purpose is to wear it like this instead of just holding it like certificates or bars. But yeah, there are pros and cons with both approaches.
well, I know that you have been analyzing gold,
Yes.
and as I do MBA right now, and we've done a couple of subjects together. Teachers remember you for your analytics, stocks versus
Gold.
gold, S&P 500 versus gold, where you found some
Optimal.
negative correlation.
Yes.
Yeah.
Yeah. So I did an analysis a couple of years back. At that time, nobody was talking about gold because it was like kind of slow, right?
Mm-hmm.
And in US dollar terms, gold did pretty bad since 2011 or
Yeah.
12 until the time I did that analysis, right? Um, until recently, actually. It just was hovering around a certain price and it fell down by almost 40%. And then it came back to the same price in a 10-year time frame.
Yeah.
But right before that, between 2008 and 2011, there was again a gold rush as it is happening now, and it happened right after the news of the global financial crisis. Right, people started running from stocks to gold, and I think
Mm-hmm.
gold increased quite a bit. We can see the chart to prove the point, and that's the correlation that I had analyzed, and I then plotted the percentage return of gold for almost 50 plus years. And my idea was to prove the point that if you have gold in your portfolio at a certain percentage, you will end up with the same outcome as you would have if you just held stocks in that time frame. So if you go to the app now, I'll show you the chart and then I'll show the ups and downs and how you can test it out with our portfolio builder. Whatever I'm claiming, you can see in results now. At that time, I only had an Excel sheet and I applied an optimization formula to come up with the optimized percentage. So now if you go to GLD, which is the gold certificate that we were talking about earlier, and if you own this, you would be able
GLD.
to own physical gold instead of actually owning the physical gold. I would recommend GLDM because GLDM has a lower expense ratio, and
Yeah.
that is around just 0.1%. GLD has 0.4%. But I look at GLD because it has more data. GLDM was recently created, so you wouldn't have that history. But GLD has 20
Okay.
years of history. For our analysis, we need GLD. But if you're buying it, not financial advice, but just a logical advice, that GLDM has a lower what do you call
Mm-hmm.
expense ratio. So just put GLD and you'll see.
Yeah. What's the difference between World Gold Trust and the second one? SPDR Gold Mini Shares Trust?
That's what that is. I mean, it's the same. We just have two names in our system, but
Yep.
SPDR is the one who's providing this ETF. See, this is SPDR Gold Trust. SPDR M is nothing but SPDR Mini. The Mini is technically telling you that we will charge you less for owning that. And most people don't know that, right? So they just unnecessarily pay 0.4% for gold certificates, while they could just pay 0.1%. So it's an education for people who are in GLD. So now if you look at the overall history, like, look at the max. It's from 2004, I guess. And as you see, between 2008 and 2000. 12,
2008 and
2012.
2012.
It was a good bump, right? And if you go,
Yeah.
it's almost doubled. And if you look at from 2005, like the 2004 at the end, you'll see even a better return, right? So
So if I go from 2005, from very beginning to 2012.
yeah, that's almost
Yeah.
four times, right? So it was a nice upside because at that time there was a lot of negative news around stocks. Stocks were not doing so well because of the financial crisis, great financial crisis that occurred right after. But
Yeah.
stocks started recovering, and you see that there is this valley, and it recovered back to its original price after like almost 10 years. And it was just flat in that price range. And when I did my analysis in 2022, nobody was that interested in gold. They were running around Bitcoin and stuff like that. But the point I made was when stock market seems to be going really well, people don't actually consider gold as a backup. But once the tariffs, as you can see, the rate hike started during that time, and then the tariffs occurred. Both these are negative news, which actually affects the overall business environment. And it's pointed out in our chart, right? Rate hikes and tariffs. And you can see the slow increase because everybody is now panicking and moving from not necessarily moving from stocks to gold, but they are investing more in gold now, just as a backup, right? And since the demand for gold has increased, it has just skyrocketed again, more than double, right? And how does it affect a person who wants to build a portfolio? Do you really need gold in your portfolio? For that, we can go to our portfolio builder and see data. So it's not a recommendation, but we'll just look at what has occurred in the past, right? So our portfolio builder will let you build the portfolio with stocks and gold. And you create your own portfolio,
Golden stocks.
whatever, right? And then you have a portfolio of $10,000, which is already pre-built.
Mhm.
Now you can
Yeah.
Now, what I found, I'll just come to the point, right? The optimal percentage allocation was 67% in stocks. So you can use SPY, S&P 500 as the benchmark and allocate 67%. Now you have 6,700
67%.
in that one. And now the remaining, you GLD and you say
GLD.
33%. And now that's it, right? So now you come down and analyze the portfolio. We'll just analyze the entire length of it, right? Since GLD was available, I think it's around 2004. So now let's save it later. And then you have the result. And you can see our platform will tell you what had happened since the start date, which is 2005 of February, pretty much the same month from 2005. You can see the 10,000 initial dollars have become 84,000, 85,000 almost, and with a CAGR, cumulative average growth rate of almost 11%. And the maximum drawdown is the key. If you see the maximum drawdown, so if you had 10,000 in your portfolio, the maximum would have lost in any of the global crisis or whatnot was just 31%. We'll do another analysis later. So now the best year was 28%, and the worst
Yeah.
year was just 20%. This is the
Hmm.
key. Now, so what? So let's go back and remove gold from that earlier allocation that you had. Just delete it. You have delete button for gold, and then maybe just put 100% of SPI.
Yeah.
Then now you analyze again. So you can put the start date. Actually,
Okay. 2802 and 2005.
yeah, that's
Okay.
it. And now you analyze portfolio. It should be one-to-one match, right? So now you see that overall return, it's 82,000.
Huh? Yeah, I see.
Total return is 82,000, which is close to what you would have received if you had put that combo that I gave you earlier. And when I did this analysis, okay, further, we look at the maximum drawdown. It's
Maximum
54,
drawdown.
and you
Yeah.
saw 31%. So you'll get less of a heart attack when you have that combo. And then you have the best year is the same. Worst year is minus 35%. Earlier we saw it minus 20%.
Yeah.
Now, this analysis I did in 2 years back. It still holds good. 2 years back when I did, gold was not too high. Even then, you get similar results. The end total return will be the same. But the only difference is the maximum drawdown and the worst year, which is much, much better if you have that combo. And it is even after gold has gone up so much, you still have the same combo. You know why? Because while gold was running up, stocks were also going up. at the same time. It's not like people think that when gold goes up, stocks go down. No, that's not how it works. That's what I figured out. In the 50-year time frame, I've noticed periods where they both go up, or whatever happens, that end optimized combo is still holding good after 2 years of my analysis. This is just data. I don't know what's going to happen in the future, but for the past 50 plus years, right? This is what I'm saying. What is your opinion?
What's my opinion on that? My opinion that it is really interesting analysis. I thought that it's moving in the opposite directions. I mean, gold and stocks. I even didn't know that it can grow as much as it is happening at this particular moment.
But last one, you have to do this, right? So now we talked about the combo between stocks and gold. We talked about gold. Now
Yeah.
you go up and just have gold, remove SPY and replace it with GLD, just the ticker name. Now you'll know
GLD.
why there is a problem, right? Now, if you look at this range, it has gone up to 100,000, right? You will feel that gold is doing well. But you have to
Yeah.
keep this in mind that gold was so flat until 2020, end of 2023, right? Just because it has boomed now doesn't mean that gold is a better performer than stocks. When you look at different time frames, you will
Mhm.
notice that gold has highly underperformed. Now, if I look at the entire stretch, starting from when this is only 20 years, right? But if I
Yeah.
go to 50 years, that's when you see the real difference. So people get confused. People look at 20 years of data and make an assumption, but that's not the real story. There is a story much before that, right? But the point is, somebody might be tempted to put everything in gold, but if you do that, then you should be ready for the next flat period. It's possible, like it had happened here. And there were several flat periods for gold for several years where people made no money, right? So you should be cognizant of the fact that gold is just a speculative asset. It's not going to produce any real value like companies. The stock market has real companies producing real products, real value to society. But gold is just a commodity. Its value is based on what the other person is willing to pay. And for a very long time, they were not willing to pay anything. It was just flat. Recently, they are willing to pay more. That's it.
Um, well, I would disagree slightly
Onwards.
that gold is a speculative asset and that it is just a commodity and commodity is not producing value. What about copper?
Copper is used more than gold in a lot of industrial setups.
Gold,
Gold is
what?
a speculative asset because there's not much industrial use for gold. If you see where people have gold, it's in vaults, right? People don't have gold in the real products.
Where
It's not a
in?
product. That is technically a vault that you are a vault. You are carrying gold on you. So if you are a vault, you are holding gold bars. That's it. Very few percentage of gold actually is being used in commercial activities, right? They use it for some stuff, but not more. Not like copper, right? But copper is available in abundance. Gold is not. Gold is a rare commodity. Since it's rare and it can hold its shine for thousands of years, it is the chosen commodity for transactions, payments, and stuff like that. But it is still a payment platform. It's not producing any value. It's just helping you transact, right? It has been used for thousands of years, right? And that's the appeal. And people love gold. I love gold. I mean, I can say whatever I say about gold, but I actually love gold. It's just the human nature attracted to gold, right? It will have value, but you can't expect that it is going to beat the stock market in the long run. But with my combo, it has been doing pretty well with the stocks and gold. So it's just data analysis.
Hmm. Do you have a saved portfolio of gold
Yes, I do.
plus stocks?
I just made it public. I started it a while back, a couple of months back, because the trend was so good. So
Yeah.
now the saved portfolios will compare with the benchmark. And what do you see for gold mix? That's the gold mix. It's like it's at
Oh,
6.5%. SPY is down, while gold. I'm using VTI, which is the
yeah.
overall market, similar to very close to SPY. And while that is down, gold has been up by 20% since I started. When did I start this portfolio? It is at the top. Yeah, starting in November. Yeah,
November. Interesting. So this is cool. Red and green, and at some point it could be green and red.
you never know, but it's that combo. I started with 33%. It has grown to 37%, 38. Yeah, close to.
Interesting. Interesting.
And we'll keep it. We'll track and see how it goes for several years to come.
Interesting. I would jump into academy and just do a little bit of learning. And as we were looking at portfolios, I would look at some portfolio building questions. Okay, what is the diversification? I think that is exactly what we need to look at.
That's exactly
So,
what we were doing now.
yeah, gold plus stocks. Is it diversification? So it reduces risk by spreading across assets. Portfolio Builder supports unlimited tickers, weights, drip. Drip is,
Dividend
uh,
reinvestment plan.
yeah, and backtesting. This is cool. We had much lower risk in the portfolio when it has stocks plus gold together,
Yes.
right?
Maybe I should have done that. When I did the after I did the analysis, I should have just created a real one like that. I would have done much better now.
Well, I will mark as complete. And the other thing, build a two stocks portfolio.
So the word stock
But
would be misleading. What we did was a
it,
there were 1,000 years of gold and then an ETF which has
yeah,
multiple stocks in it. So if you are going with an ETF and a commodity like gold, that is not as risky as picking, let's say, two specific companies, right? Yeah.
yeah, yeah,
But it works. It works for some people. Some people just buy two or three companies and they are successful. I know someone who was some millionaire, multimillionaire, who had just two stocks, like Apple and I don't know what the other one was. Probably Johnson Johnson. I don't know. He just had two stocks and they both are doing well. So,
yeah. Well, tell me, does it make any sense to rate gold on ESG?
no.
But there are some companies related to
Oh
gold
yeah,
mining.
I almost forgot. You have to go to search Barrick Gold or Newmont. This is actually
Newmont.
something very interesting. We go to Newmont. I found something that I was waiting for it because I was not sure how it works, but now I know how it works. Now Newmont is a gold mining company. I guess if you look at about NEM near the
Yeah,
dividend, you see Newmont engages in production and exploration of gold. Great, right? They also do
yeah,
copper, paper, and all that. That's not the concern. Now, if you look at the stock price, very interesting stuff. We look at last 5 years. Now, when gold was
ooh,
not doing so well, the stock was just nowhere, right? It's pretty low. Now you know gold has started coming back up, and they have been able to dig it and sell it, whatnot, right? So now the stock has increased since January 2025. That's just last year, right? If you check what happened, it's up almost three times. Yeah, three times.
crazy.
So
It's just a year.
it took some time to catch up. It's not like it was going along with gold. It took some time to catch up, and but when the rally kicked in, this has more returns than gold itself. And when gold was
Yeah,
suppressed, if you look at a 20-year time frame, let's see if they have 20 years. Yeah, I think they have. You see, it's pretty flat because nothing much happened since 2007 or 2005. Gold
uh-huh.
had this rally that we talked about earlier, so the stock was okay, and then it fell down because gold started falling down, right? It's been flat for a while and now it's going up. Now we can check with Barrick's Gold also. That's another gold company that I usually follow. And I think they will have a similar trend. Oh, their ticker is B. That's it. That's a simple one. Okay. Look at
Yeah.
this. Again, look at 5 years. You see similar trend. Like it's flat. Nothing's happening. And then boom, since 2025, how much did it go up? I think pretty much the same. Three times.
So let's go. Yeah, same,
Same.
exactly the same.
Mm,
It was
More. But
change
yeah.
plus 245. It was exactly the same
Exactly
number.
same. Okay, fine. Great. So something we have I always was skeptical about will this occur? I didn't know because it didn't happen. Now I know for sure that it will happen. Okay, so
That's incredible. So, and if we look like, let's say, at 10 years, then,
nothing much.
or even max.
Yeah, yeah. See this. This is actually even more beautiful because during that financial crisis, gold went up, so the stock was up, and when gold started falling down, how much did the stock lose from the peak? Can you check the returns?
So that was the peak, and then it was like
Yeah.
minus 86%.
86%. Now this is the now gold won't didn't lose 86%. It lost 40%. But this is doing double that, right? Now if somebody was really into gold and they loved gold, instead of buying gold if they had put it here, from that point on, look at the total so far.
Okay, so if I go from here to, ooh, whoo,
Woohoo, right? So that is perfect.
800 for like seven
Like almost 9 times,
767%.
9x returns, right? Within 10 years, right? So this is an option for people who are playing with gold. Barrick's gold, it's $75 billion now. If gold price drops, I'm 100% sure that this guy is going to crash. And the same
Yeah.
cycle has to repeat because that's how it works. And hopefully the company can stay on for a while. But if it does stay on, this trend can repeat.
That's incredible. Well, should we rate the
Yeah, you are now ESG work.
let's do that.
I'm not sure if they have given any report. We'll have to check if we find any AI insights for this company.
Well, we'll find out shortly.
No, they have really.
So, yeah, it's not super recent. I'm little bit bored of reading. So what we will do, I was trying to create
Interesting.
AI image of gold, as you see. Create infographics for. Okay. Google, please promote our YouTube videos. We are advertising your Nana
Yes.
Banana and Gemini.
Yes.
I'm unsure if Google wants everyone to jump in and just start using Gemini with Nana Banana, because do they have enough capacity to have all these people playing with AI?
Looks like they have. But there is a plan. I heard Google is trying to invest like 185 billion or so. So they have the cash to invest.
Cash is one thing. Other thing is the capacity. We will
We'll
discuss
discuss
that. But
in a different one. Yeah.
yeah, yeah.
AI.
Uh,
This is nice. Yeah.
That's what we have. So we have key ESG initiatives, and there is integrated sustainability approach, holistic strategy for ESG factors. Of course, they have to do something, and they have to align with UN Sustainable Development goals. There are not that much numbers, but it seems like they are reducing emission, economic contribution, community relationships, disputes over what's that? There is some gold mine in Mali, which they had issues. I believe that any mining business is difficult to manage in terms of environment.
Because
Right.
the whole business is messing with the environment, digging up stuff. So it's very hard. Yeah.
Yeah. And environmental performance achieved B grade for third consecutive year in sustainability scorecard. B grade, it's not that good. A grade is good, right?
At least it's not D. So
Yeah. And B is pretty much the same as the ticker. They
oh
probably
yeah,
should keep it.
maybe they just decided that we will not go beyond B.
We will just keep B. They align with no poverty, of course, gold. Let's give them 8. Let's go straight away to decent work and economic growth. So I would give them still 7.
Investing
Industry,
outcome, yes, probably 8 because they are using latest tech to dig gold out.
yeah,
Reduce
reduce
inequalities, no,
inequality.
leave it, keep it at 5.
Okay. And then let's go to sustainable cities and communities. It's questionable.
Reasonable,
Responsible consumption and production.
probably because they are producing something that people want. Climate
Climate
action, they're
actions.
trying.
They're trying, but it's not easy. It's not easy.
Like water
Well,
and I don't think so. Maybe land, they're messing up the land because they're digging up stuff. So 4, yeah. And then you have peace, justice. Yes, I think that they're cool with that. Partnerships,
goals.
yeah, they do partner with a lot of people. So then the
Absolutely.
panel,
And then let's submit. So we rate them not as high, 57 on environmental impact. A social impact profile would be at 61, reasonable. Governance and integrity, 68. So governance is the highest one. And this is our scoring for Barrick Mining Corporation.
mhm.
Shakti, thank you. That was super interesting,
Yes.
and
Thank you.
I'm really impressed by the fact that you picked this trend way before when
Yeah,
everyone started talking about it.
isn't it? Cool.
Yeah. Thank you very much.
Thank you.
Everyone, please like, share, and subscribe. We will really appreciate your support and come back with new stories about new companies, commodities, stocks market, news, super investors, and our learnings. Thank you and bye.